Welcome to Business Studies for JSS 3. Today we study financial literacy, personal finance. What is financial literacy? Financial literacy is the ability to understand and effectively use financial skills, including budgeting, saving, investing, managing debt, and understanding financial products. What is personal finance? Personal finance refers to the management of an individual's or family's financial resources, income, expenses, savings, investments, and debts. Key areas of personal finance. 1. Income. Income is money received. Sources of income: employment income, salary, wages, business income or profit from a business, investment income, rent, dividends, interest, government transfers, pension, social welfare, remittances, or money sent from abroad. 2. Budgeting. A personal budget plans how income will be spent. The 50-30-20 rule: 50% of income on needs are rent, food, utilities. 30% on wants, entertainment, clothing beyond basics. 20% on savings and debt repayment. 3. Saving. Saving is setting aside part of income for future use. Why save? Emergency fund, unexpected expenses. Goals: school fees, starting a business, buying a phone. Retirement. Where to save in Nigeria: commercial banks, savings accounts, microfinance banks, cooperative societies, thrift savings, AGO/Isusu, informal savings groups. Interest. When you save in a bank, the bank pays you interest on your savings. 4. Debt management. Debt is money borrowed that must be repaid with interest. Types of debt in Nigeria: bank loans, credit cards, mobile money loans, e.g., fair money, carbon, cooperative loans. Managing debt: only borrow what you can afford to repay. Understand the interest rate and total repayment amount. Pay debts on time to avoid penalties. 5. Investing. Investing is putting money into assets that have the potential to grow in value or generate income over time. Options for young Nigerians: savings in a bank, low return but safe, treasury bills and bonds, government securities, stocks, shares in companies on the Nigerian Stock Exchange, real estate, mutual funds, apps like PiggyVest and Carrywise. 6. Insurance. Insurance is a financial product that provides protection against financial loss due to events like accidents, illness, death, or fire. Types in Nigeria: health insurance, NHIS, motor vehicle insurance, compulsory by law, life insurance. Financial habits for success. 1. Spend less than you earn. 2. Save before you spend, pay yourself first. 3. Avoid impulse buying. 4. Keep financial records. 5. Avoid excessive debt. 6. Invest early. The earlier you invest, the more time your money has to grow. Remember, financial literacy equals ability to understand plus effectively use financial skills equals budgeting plus saving plus investing plus managing debt plus understanding financial products. Personal finance equals management of an individual's or family's financial resources equals income plus expenses plus savings plus investments plus debts. Key areas: income equals money received, sources equals employment income/salary plus wages plus business income/profit plus investment income/rent plus dividends plus interest plus government transfer/pension plus social welfare plus remittances. Budgeting equals personal budget plans how income will be spent. 50-30-20 rule equals 50% on needs/rent plus food plus utilities plus 30% on wants/entertainment plus clothing beyond basics plus 20% on savings plus debt repayment. Saving equals setting aside part of income for future use. Why save equals emergency fund plus goals/school fees plus starting a business plus buying a phone plus retirement. Where to save in Nigeria equals commercial banks/savings accounts plus microfinance banks plus cooperative societies plus thrift savings/AGO plus Isusu equals informal savings groups. When you save in a bank, the bank pays you interest. Debt management equals debt equals money borrowed that must be repaid with interest. Types equals bank loans plus credit cards plus mobile money loans equals fair money plus carbon plus cooperative loans. Managing debt equals only borrow what you can afford to repay plus understand interest rate plus total repayment amount plus pay debts on time to avoid penalties. Investing equals putting money into assets that have potential to grow in value or generate income. Options equal savings in bank/low return but safe plus treasury bills plus bonds/government securities plus stock/shares in companies on Nigerian stock exchange plus real estate plus mutual funds plus apps equals piggyvest plus cowrywise. Insurance equals financial product that provides protection against financial loss. Types equals health insurance/NHIS plus motor vehicle insurance/compulsory by law plus life insurance. Financial habits: spend less than you earn. Save before you spend equals pay yourself first. Avoid impulse buying. Keep financial records. Avoid excessive debt. Invest early equals more time your money has to grow. Thank you.